Hello, this is Bob Joyner, and in front of you is a chart that's probably very different from most charts that you're used to looking at. So I'm going to cover the details, the indicators that are used on this. Starting on the left side, we have a 3-day chart, and I'm using Heikin-Ashi candles and Ichimoku indicators. I'm using CCI 66 and Copic curve I have set at 7, 11, and 6. On the right panel over here, this is a 4-hour chart showing Fisher transform set at 10. Just putting those two elements together at first, what you'll notice is that when Fisher transform is below this zero line or trigger line here, while we're in the context of a bullish trend over here, which we were, then that is said to be oversold at that point, and we're looking for a rebound to take that currency long. Typically, when the Fisher transform moves back above the zero line on the 4-hour chart, then we typically have a go ahead to go long, but I'm going to show you some other criteria to help solidify that decision. The key chart on all of this is the middle panel. You'll see that that's listed as a 4-hour chart, and essentially what I've done is I've layered various aspects of Ichimoku onto this chart. I've layered a 4-hour chart shown in yellow, so the Kumo here, or cloud. If you're not familiar with Ichimoku, then the Kumo is said to be an area of support or resistance. When price is above it, then it acts as support. So this is a shorter term area of support. You can see that's working for this pair, has been for quite some time. And this teal colored cloud or Kumo down in here is a 16-hour. So I'm layering a 4-hour and a 16-hour Ichimoku. I have left out some of the other indicators to make this chart more clear on the Ichimoku system, but what I have left intact are the two Chiku spans, or lagging spans as some people call them. The longer term lagging span is shown in yellow over here. You can see that I've got an orange line here to kind of show where that current price relates to. Chiku always follows the closing price. The purple line in here follows the 4-hour Chiku span. I've got a blue line in here to kind of show where that occurs. Okay, so if we just move that line up in here, you'll see where that closing price on Friday relates to the current Chiku span. Now the reason I had that line down in here was to show you this. Critical to this system is that both Chiku spans be above what I call the historical price curve. The historical price curve, since this is a lagging span here on both of our indicators, one's set at a 16-hour, one's set at a 4-hour. But what's critical is when both lines are above the historical price curve, which is this curve in the past of price, then we are bullish. So if we take this particular chart back, way back, then you follow the yellow line here, then you'll see that that yellow line has been above the historical price curve. Had a little bit of a challenge in here, some choppy weather down in here, but even so the shorter term Kumo was above the longer term Kumo. But overall you can see that that yellow line has been above the historical price curve from way back in here, back in April of this year. I'm recording this, by the way, in July, mid-July 2015. So essentially, when the longer term Chiku is above the historical price curve, and you have to remember that relates back over to here because it's a longer term, and then you also have the shorter term above the historical price curve, then right in here is where our entry would have been way back and then at that point. And you can see that we would have stayed in that trade for quite some time as the purple line stays above the historical price curve. Now there are other elements of the system which will be covered in the videos that I'll be sharing with you, but those are the essential elements. I know that this is probably a lot of new stuff to some of you. Those who are members of Forex Pip Starter Pro are already familiar with most of these indicators. But this is a layered kind of Ichimoku chart looking at longer term trends on currencies, and this is just a brief overview of the indicators I'll be using in the future videos.